Your money, your stories, your freedom. The Peter Schiff Show.
Welcome back, everybody. It's Peter Schiff here on Thursday at the Peter Schiff Show here at SchiffRadio.com. I was getting my days confused. For a minute, I thought it was Friday. I don't know why, but it's only Thursday. Friday is the big jobs numbers that come out. Today, we just got the weekly unemployment claims where we had first-time claims holding at about 400,000. But there's a lot of news going on. First of all, the markets. I mean, the Dow Jones, which, you remember yesterday we talked about, would the Dow have 9 consecutive drops, which would be the biggest decline since 1978. The Dow, which had been down about 150 earlier in the morning, eked out about a 20-point gain by the close. So it was not 9 consecutive down days. Although today the Dow was down about 170 points, so we are resuming the decline. In fact, if you look at the leaders of the decline, it pretty much is exactly what I said was going to lead the market lower. Look at the financials. Citigroup, new 52-week low today. Bank of America, new 52-week low. Again, I've always said stay away from these financials. They're going to do poorly, and they're making new lows. Look at the home builders all getting crushed. Many of them are on 52-week lows right now. Pulte Homes is at a 52-week low. Standard Pacific is at a 52-week low. Hovanian is at a 52-week low. And, of course, those that aren't at lows yet are headed there. Why are the banks getting crushed? Why are the home builders getting crushed? The retailers also getting hit hard. The Gap, for example, down 5% today. I mean, why? So you've got all of the U.S. Economic sensitive stocks, the financials, the retailers, the home builders, all getting hit. Why is that happening? Well, because mainstream economists are now finally figuring out what I've been warning about for a year or two, that we're going back into recession. That's what the economic numbers are now showing. And why is it that all these economists that had such rosy, optimistic estimates 6 months ago, a year ago, are now all of a sudden coming to terms with the fact that we're heading back to recession? Well, because they don't understand economics. I knew when everybody was heralding the phony recovery that it wasn't real. I knew it was a stimulus-induced high, and I knew that as the stimulus wore off, the recession would resume with a vengeance. In fact, it's going to be worse now than it was in 2009 because the underlying economic fundamentals have been exacerbated. They have been worsened by the stimulus that we took. And there are still some economists that are saying, well, maybe we'll avoid recession. We probably will. These are the same economists who in 2008 were saying that we probably would avoid a recession, even though one had begun in the fourth quarter of 2007, and they didn't even know it yet because they were looking in the rearview mirror at government statistics that were later revised downward to reflect economic reality. I think that is the case today. We're clearly, I think, already in the recession. The economy is contracting now because the inflation numbers are being underestimated. It's harder to see, but I think the size of the contraction will continue, and it will eventually be evident that we're going back into recession. Meanwhile, look at what's happening in the foreign exchange markets today. The dollar against fiat currencies is rising because the Bank of Japan, following in the footsteps of the Bank of the Swiss National Bank, has intervened last night aggressively. They have sold Japanese yen. The Japanese yen is now down about 3%. As a result, it was down 4% earlier today. Again, very foolish. The Bank of Japan having to print a lot of yen, creating inflationary pressures in Japan, which is what they don't need when they're trying to rebuild from an earthquake. Meanwhile, now the Japanese are going to be stockpiling U.S. treasuries because they're buying all these dollars. That's one of the reasons I think treasuries are up. Obviously, the Japanese are in there buying treasuries because, after all, they now have a boatload more dollars that they don't need. And they generally buy treasuries with them, which is what everybody does. So now we've got more competitive devaluations. We've got the Swiss saying, we want to make our currency weaker. We got the Japanese saying, we want to make our currency weaker. Of course, all the countries like China and the countries that are pegging to the dollar, they have got to be printing like crazy now to prevent their currencies from going up. It's more of this competitive devaluation, the stupidest thing that countries can do. Again, it's like our parents always tell us, if your friend jumps off a bridge, would you do it too? And obviously the answer is no. But when it comes to monetary policy, it's yes. If the Swiss or the Japanese see the Americans jumping off a bridge, they want to jump off the same bridge. They want to inflict damage on their citizens, even though they don't have to. So what is the winner? What wins when central banks undermine their currency? Gold. Gold at a new record high, up another $22 today. We're at about 1,700 probably almost in the futures, or 1,650 or so. Even the GLD now is around 1,640. Silver up 50 cents, back over $41. This is a big move. The Dow ratio obviously getting hammered with the Dow at 11,700 and gold where it is 1640. You're looking at just under 7.1. We're ready to crack the 7.0 level ounces of gold. That's a pretty big move. It wasn't a few weeks ago that we had the Dow moved up to about 8.7 ounces of gold. Now it's down to about 7. The Dow is really getting crushed right now in terms of real money. And again, the media will be talking about the strength of the dollar today because they're looking at the dollar index. The dollar is not strong. It's weak. Look at the price of gold going up. And why did the dollar index go up? The dollar index went up because central banks intervened to artificially prop the dollar up. That's not strength. When you need to be propped up artificially, that's not a sign of strength. That's a sign of weakness. But the media will nonetheless, be focused on the dollar index and talk about the strong dollar when the dollar is anything but strong. Now, of course, the Swiss currency recovered quite a bit yesterday from the intervention, and it is barely down today. So we'll see if the Japanese yen can recoup much of what was lost based on the artificial intervention from yesterday. Now, also, I had to mention again in my inbox again today, the NIA continues. I've never seen a pump and dump so relentless as with the National Association, Inflation Association, and Mega Precious Metals. In fact, here's what they wrote in their email today. They're saying Mega Precious Metals is showing tremendous strength, gaining 8.5% on Wednesday. Why did it gain 8.5% on Wednesday? Because they touted it on Wednesday. And what is the tremendous strength? It did 130,000 shares volume, $60,000. It went up 8.5% on $60,000. That's not tremendous strength. That's just the NIA members who are dumb enough to buy this stock because National Inflation Association touted it. And here they are touting it again, and they're talking about how amazing it is that the stock is up so much and people are making so much money following their advice. They're saying, we recommended it at 37 cents, and it's a gain of 73%. And they're talking about how amazing that gain is. What's amazing about it? Nobody bought it at 37 cents. Everybody bought it at about 60 cents. And the only reason they're not all down is because you keep finding more suckers to buy it. Meanwhile, a lot of people paid 70 and 80 cents for it, and they're down, not up. Meanwhile, people are losing 45% on that ag pump and dump that they paid $1,000 for. I don't know how they can continue to put out these press releases full of fraud, full of lies, right under the nose of the SEC, and they sit back and they do nothing about it while they waste their time going after legitimate money managers and just running up their costs and just making a mess of everything. But anyway, stay away from these guys. It is really getting aggravating. But anyway, we've got a commercial coming up. I will be back. I'm going to take your phone calls, 855-4SHIFT. And we've got a great guest at 11 o'clock. Judge Andrew Napolitano of Freedom Watch will be our guest at 11 o'clock. So make sure and stick around for that.
Why did you do it? Why did you do that thing to me? The only one who knows the truth, man, that's him, me, and you.
The Peter Schiff Show. Since the Peter Schiff Show was last on the air, the national debt added another $7.89 million. Luckily, Peter's intelligence is growing twice as fast.
That's incredible.
Welcome back to your source of sanity in an insane world. It's the Peter Schiff Show.
Welcome back, everybody. This is Peter Schiff here at SchiffRadio.com. And the Dow Jones is now down 210 points. Market really getting clobbered. In fact, one of the things that makes me worried that we're probably going to have a much bigger decline here, maybe the Dow could go all the way down to 10,000, is because so many people that are on television are saying to buy this dip, not to worry. Everything looks great. And so, I don't know. I mean, there's some key support at around 11,500. So if we can hold that level, right now we're 11,700, then maybe that will be it for this move down, and we'll move back up. Again, we're not going higher in the Dow. We're just going to trend sideways for years as the dollar loses value. But given how sanguine everybody seems to be, there could be a big drop down in the U.S. stock market in the months ahead, because technically it is breaking down. And if we close below like 11,000, maybe 11,550 or 11,500, I really can't see much support between there and about the 10,000 level. Meanwhile, gold to me looks like it wants to continue to go higher. The gold stocks, again, today it's a tug of war between falling stock prices and rising gold prices. The Huey is actually down 6 points, which is about 1%. It's a little bit outperforming the Dow, which is down more than that percentage-wise. Some of the gold stocks are up today. Some of them are in the red. But, again, they are moving with stocks right now as opposed to moving with the bullion. Also, I want to point out a lot of people who are trying to say that there's not going to be a recession, like guys like Larry Kudlow on CNBC. Again, he always gets it wrong. He's pretty much of a cheerleader on the economy, so you could take what he says with a grain of salt. But one of the reasons, he's saying that there's not going to be a recession, but the economists on the left, like Paul Krugman, they're saying that, we're going to go back into recession because there's not enough government stimulus. In fact, the left is saying that the spending cuts that Congress just agreed on might push the economy back into recession. And guys like Kudlow, who theoretically represent free market economists, are saying, no, the Keynesians are wrong. It's not going to push the economy into recession. Well, the problem is Krugman is going to be right for the wrong reason. We are going into a recession, but not because the government cut spending. In fact, they didn't cut spending. There are no cuts. The reason we're going into a recession is because the government is spending too much. But Krugman is going to be right for the wrong reason. And again, the people that pretend that they're free market economists on television who are saying, don't worry, the economy is recovering, there's not going to be a recession, they're going to be the ones that get it wrong. So again, they end up discrediting free market capitalism, even though they're trying to champion it. That was what happened before when Kudlow and his crew were talking about Goldilocks, the greatest story never told, how great the U.S. economy was, when I knew it was about to fall off the edge of a cliff. And a lot of times, the economists on the right, when I talked about how bad things were going to get, they criticized me for that. And of course, I was right, and they were discrediting the free market principles that they think that they espouse. Meanwhile, they basically handed the victory to the left. The left was saying things were going to get worse. They got it right, but they got it right for the wrong reason. And once again, all the Keynesians that are saying we're going back to recession, they're going to be the ones that get it right. While the free market guys who are saying no, they're getting it wrong. Hey, also, before I take some calls, I want to mention some of my TV appearances for today and tomorrow. First of all, I am going to be on the BBC TV in the UK. I forget the time in London. I was at 5-hour difference. It's a live show, and I'm filming it at 5:30, so it'll air on BBC TV in the UK. Also here in the U.S. at 7:30. I'm doing Lou Dobbs on Fox Business. That's a live show. Then also I am taping today a PBS Nightly Business Report, which will be aired Friday on the Nightly Business Report on PBS. So plenty of opportunities to see me on television today and tomorrow, depending on where you live. And I'm sure a lot of this stuff will make it onto YouTube. Meantime, let me grab some phone calls on hold. Brian from Chandler, Arizona. Brian, welcome to the show.
Hey, Peter. Good to talk to you. I have a friend who made a powerful argument in his mind for fiat currency, citing Roosevelt, World War II. If we couldn't print the money to defend ourselves, what would you do? And I didn't really have an answer for him. I was wondering if you would expand on that for me.
Well, first of all, we were on a gold standard during the Second World War. So, we fought the Second World War on a gold standard. We didn't go off the gold standard until 1971. But the war was financed predominantly by borrowing and tax increases. There were massive tax increases. The victory tax of 1942 was a huge tax increase. We imposed the telephone excise tax for the first time.